You are listening to the CMQ Investing Podcast. My name is Chris Franco, and you might know that Warren Buffett and Charlie Munger have made negative comments about Bitcoin over the last several years, but what's often overlooked is that both Warren Buffett and Charlie Munger have said positive things about blockchain, that is, blockchain technology. Warren Buffett has called it ingenious and important. Charlie Munger has said that it's a great triumph for the human mind. By the end of this episode, I think you'll have a better idea as to why that is. I'll be reading from a very recent article that was published in the Wall Street Journal that details, without too much detail, exactly how blockchain technology is already beginning to revolutionize Wall Street as we know it. So I'm excited to share with you. Let's dive into it, but before we do, just a very friendly reminder to follow CMQ Investing on Spotify and Apple. It's totally free, and that way you will get all the latest episodes in your feed as soon as they're released. And if you're already following, thank you so much. I also want to thank everyone who follows either Charlie Munger Quotes or Warren Buffett videos on Instagram. Charlie Munger Quotes has 105,000 followers, and Warren Buffett videos, despite being a relatively new page, is already up to 175,000 followers. So thank you to everyone who's following those, and I hope you continue to get a lot of value from those pages. With that said, let's get to this article. As crypto slumps, Goldman Sachs aims for a Wall Street built on blockchain. Wall Street's biggest banks have largely avoided investing directly in cryptocurrencies, but many are quietly working to integrate blockchain, the technology behind crypto, into trading in other businesses. Goldman Sachs Group Incorporated is already trading some bonds and other debt securities for clients on blockchain-based networks such as Ethereum, and the bank is building its own blockchain-based trading platform. JP Morgan Chase & Company already has a platform in place called Onyx. I wonder if the rap group Onyx is able to get some money for that. Big Wall Street firms help make the economy run, connecting buyers and sellers of securities and lending money to businesses. But their sophisticated trades are often run on creaky old systems. Goldman and others hope that they will be able to run faster, less costly, and ultimately more profitable systems based on blockchains. And here we go. The blockchain technology here is able to, or should be a positively disruptive force on Wall Street. And this is a prime example why. The blockchain, sometimes called distributed ledger technology, is the plumbing that keeps crypto markets running. It is basically a software program that uses an open records keeping system, a central ledger, to track assets and record transactions and information about ownership of those assets. Every participant operates off the same central ledger. Blockchain-driven systems on Wall Street would be different in some respects from the systems behind Bitcoin and other cryptocurrencies. They would be permission networks, meaning a central party, such as a bank or consortium of banks, would decide who is allowed on. Outside of banking, Walmart Incorporated has used blockchain for tracking its supply chains. In real estate, some title companies have used it for recording home ownership. Goldman and others say that using blockchain in trading platforms should lower the risk associated with trading partners. Backers also say that it could make it easier for issuers to track who owns their shares or other assets. Blockchain technology is going to rewire all financial services, said Tom Farley, the former president of the New York Stock Exchange. That said, Wall Street firms have been experimenting with blockchain projects for at least the past 5 years. Despite much hype, few have had a widespread impact on how financial transactions take place. Others have thrown in the towel. A group of European insurance companies formed a consortium called B3I in 2016 to explore blockchain uses in their industry. In July, the consortium shut down after failing to raise new capital. Regulatory issues could also be a challenge, especially for multinational banks dealing with a host of overseers. Rules about risk management, custody, and collateral are still being developed in the US and overseas. Challenges aside, few banks want to run the risk of being left out of a potential new technology. The biggest are engaged in an arms race to build competing platforms. At Goldman, Matthew McDermott runs the Digital Asset Group, which has about 70 full-time staffers specializing in areas such as engineering, compliance, and legal and government affairs. Mr. McDermott said he was a skeptic when he first heard of the blockchain, but no more. The same is true of many top Wall Street bankers, who initially scoffed at the idea that Bitcoin or other cryptocurrencies were more than a fad. "I'm not doing this just to satisfy my curiosity," said Mr. McDermott, who has worked at Goldman for 16 years and led the group since 2020. "Everything has a commercial driver." Goldman declined to disclose financial information about the group, including how much the bank has invested in it or whether it has turned a profit. The firm expects the blockchain-based trading platform it is building to serve itself and its clients, but also possibly be used by other banks as well. Some rivals are also planning for wider platforms. JP Morgan's Onyx platform, launched in 2020, can be used by other banks. Goldman, PNB Paribas, and others have been using it to trade repos or repurchase agreements. JP Morgan said Onyx has processed more than $350 billion of repo transactions. I want to skip to this very last part because it provides some use cases, or just exactly how this blockchain technology can make financial institutions run better. Last year, Goldman arranged a $100 million two-year bond issue for the European Investment Bank that was registered in France and handled on the Ethereum network. Normally, a bond sale like that would settle in 5 days. Mr. McDermott said it settled in just an hour. What that means in practice is that money that might otherwise be tied up for days between counterparties will be freed up. It also means there is far less time to worry about counterparty risk. The odds that one party or the other to a trade won't hold up its end of the transaction. The bank has more clients for such digital bonds, Mr. McDermott said, and expects to complete more sales. Now, on a personal note, I expect blockchain technology to impact every industry, or at least almost every industry, over the next decade or so. It'll be really interesting to watch how different industries or different businesses in those industries adapt and how others fail to adapt. This reminds me of a quote from Charlie Munger, and it goes like this. He says that the companies of America behave more like biology than they do anything else. All the individuals die, and so do all the species. It's just a question of time. And that's pretty well what happens in the economy, too. Now, I don't mean to make this morbid as we conclude here, but these kinds of shifts, these are some of the reasons or some of the beginnings of why a great company or a big company begins to lose its position. It's a failure to respond to the change. As Darwin once said, it is not the strongest of the species that survives, nor the most intelligent that survives. It is the one that is most adaptable to change. Keep that in mind as you're looking through 10Ks and trying to understand different businesses. And keep in mind that if you're not already following the podcast, you can do that now. It takes just a couple seconds, and you can listen to over 100 different episodes, taking this time-tested investing wisdom. It's been so helpful to me, and I hope it continues to be helpful to you. For CMQ Investing, my name is Chris Franco. We'll talk soon.